Hey everyone, welcome back to Corporate Decoder, the place where we decode the often confusing world of corporate filings. Today, we're diving into an amended report from Origin Bancorp, and let me tell you, sometimes the most interesting stories come from the corrections. It's like finding out the magician's trick after the show. So, Origin Bancorp had to amend their financial report for the second quarter of 2024. This wasn't just a minor typo fix, they are fixing a material weakness, which is code for we messed up something important in their internal controls. What's a material weakness? Think of it as a significant flaw in the company's system of checks and balances. This means the company's procedures to ensure accurate financial reporting weren't up to par. The good news is this material weakness didn't change the actual financial numbers they initially reported. So, the profit, the revenue, all that stayed the same. But the fact that they had to restate because of this weakness in the checks and balances is still significant. Basically, management realized their initial assessment of their own controls was too optimistic. They thought everything was fine, and then they found out, well, it wasn't. They are admitting their disclosure controls, meaning the processes they use to make sure information is accurate and transparent, weren't effective as of June 30, 2024. The issue boils down to a weakness in how employees could manually transfer money between deposit accounts. It's like finding out the bank teller had a secret backdoor to move funds around, which creates a big opportunity for fraud. What does it mean for investors? It means there's a higher risk that something could have been missed or misreported in their financial statements. While the numbers themselves didn't change this time, the risk is now apparent. Origin Bancorp says that they are already working to fix it. They've implemented some changes to try and catch similar problems in the future. Think of it as installing better security cameras and alarms after a near break-in. Interestingly, this whole reevaluation seems to be triggered by some questioned activity involving a former banker in East Texas. It sounds like this event made them take a closer look at their internal controls, leading to the discovery of the material weakness. It always takes an event to discover problems that can cause a lot of damage. The company does acknowledge that no system is perfect. There are always limitations, potential for human error, and the risk of fraud. It's a reminder that even with the best intentions, things can still go wrong. Now, let's briefly touch on some other documents attached to the filing. There are the usual legal documents like the Articles of Incorporation and Bylaws, which basically lay out the rules for how the company is run. Then we have certifications from the CEO and CFO, swearing that the information in the report is accurate to the best of their knowledge. Except, in this case, they are swearing to it after finding the material weakness, so it's like a second attempt at getting it right. Origin Bancorp is traded on the New York Stock Exchange under the ticker symbol OBK. As of July 31, 2024, there were over 31 million shares of common stock outstanding. The report was signed by Drake Mills, Chairman, President, and CEO, as well as William J. Wallace, IV, Senior Executive Officer and Chief Financial Officer. These are the people ultimately responsible for the accuracy and integrity of the company's financial reporting. Now, what does all of this mean for Origin Bancorp? The fact that they had to amend their report due to a material weakness is definitely a red flag. It suggests that there might be underlying problems with their internal controls and risk management. On the other hand, the fact that the financial statements themselves didn't need to be changed is a positive sign. It means the actual numbers were still accurate, even if the processes for ensuring that accuracy were flawed. Looking at this from a broader perspective, it seems that Origin Bancorp is in a period of growth and expansion, but they need to make sure their internal controls can keep pace. They need to invest in better systems and processes to prevent future problems. This event might be a painful lesson, but it could also be an opportunity for them to improve their operations and build a stronger, more resilient company. While I cannot provide real-time stock values or stock advice, remember to do your own research and consult with a financial professional before making any investment decisions. In conclusion, Origin Bancorp's amended filing highlights the importance of strong internal controls and the potential risks of even seemingly minor flaws in a company's systems. While they are addressing the issues and the numbers were okay, the company needs to regain the trust of their investors and the market by improving financial transparency. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate decoding. What company should we analyze next? Let us know in the comments.